Good evening, all of you. Welcome to the Q3 investor call. And the quarter has been done, has concluded as we expected. I think, as you all know, we have announced also last time itself, the 2 quarters, that is the September ending as well as the December ending, has completely consumed by the technology costs. I think now this current quarter is free of any such backlogs or any kind of such heavy items. And instantly, as I see, I think in this year itself we have absorbed, thanks to the markets which have helped us, the entire the technology exceptional item that has taken place, or the incident that has taken place on account of the technology, whatever payment that we have made to the vendor. I think now going forward, we should only be looking at more stable costs, and as I have already explained in the past also, the costs are going to be by and large not linked to the technology costs will not be linked to the turnover. It will be more or less on the lines that we have anticipated. I will not take much time, and I think I will let the room be open for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Hi. Good evening, everyone. So firstly, if you could, now spell out or give some indications on what could be the technology cost. You had mentioned earlier that, it will be more, you wouldn't have AMC cost in the first year. But what would be the AMC cost roughly, approximately from year 2? And when does it start kicking into our P&L? And secondly, are we getting anything from TCS in terms of any recovery of delayed delivery? That would be my first question.
Okay. I think, although we have commissioned it, but we should not be disclosing because of the contractual obligations. So I may not be able to tell you exactly what the AMC is. But yes, it kicks in from October 16th onwards. This 24th this year, from October onwards. So that's one part of it. And on the TCS thing, yes, that they are still implementing. The post-go live activities are also there. Some functionalities we kept pending, and I think a call will be taken appropriately. But that will not be a huge amount that that we will be able to recover a substantial part of it from what we paid to 63 Moons, our previous vendor, from this.
Can you give us the amount capitalized for the software cost? Now it would have been there in your balance sheet, right?
That's right. Yeah.
So could you give that amount at least, the capitalized amount?
CFO will speak.
So I think last time when we discussed this in the call, so we had said it would be in the range of 225. So it's actually around 237 crores that we have capitalized. This includes the software as well as the ecosystem, that is the servers, networking equipment, and also operating and application software. And also...
Okay. Got that. So secondly, on the FPI, direct market access that we have started, could you spell out as to, whether we started for both institutions as well as the individual FPIs? And secondly, for institutional FPIs, what really do we offer, or what advantages do they really have to kind of, do volumes in India as compared to globally, where, they would be doing much higher volumes? And what, according to you, is the potential if the volumes really scale up in India? That would be my last question.
Okay. See, this FPI category 1 is what is currently permitted, and that's where the DMA facility has also been enabled. FPI 2 will also be in the pipeline. I think testing is happening. And once FPI 2 is permitted, then they will also be eligible to trade on the, using the DMA facility. And anyway, DMA has been introduced just, few days ago, maybe a week or 10, not long ago. I think that is done. Then this why FPIs participate here, and as I have also said in the past, that the price movement need not be the uniform across the globe. There could be differences. Similarly, our contracts are what we call rupee denominated as against the other contracts wherever it is getting traded. And third, which is important, equally important, is there's a 4-month calendar spread may be different in different markets. So that will also incentivize the market participants to trade. And that is not only for them, and it's for other players also. So I think there are opportunities. That's how it is.
Just to this clarification of FPI 2, you're saying SEBI has not permitted yet?
No. This permitted. We are under testing. We are testing.
Okay. By when do you think you could be able to launch for FPI 2?
We should be able to do it in this quarter. That's the way.
Okay. And what is the potential that you think from the FPIs?
Well, I will not be able to comment on it. That I will not be able to comment.
Okay. Just last data keeping question on what would be the breakup of revenues between options and futures? Firstly, transaction and non-transaction, and then in the transaction segment, futures and options.
Yeah. 1 minute. Yeah. Go ahead.
The total transaction charges that we earned during the quarter was 156 crores. 55 crores is from futures and 101 from options.
Okay. Thank you so much.
Thank you. The next question is from the line of Ankit Goda from Avendus Spark. Please go ahead.
Thank you for the opportunity. This is Ankit Goda. Sir, on TCS cost which you have capitalized, what is the likely amortization period you will take it to your numbers? Just wanted to understand the yearly amortization come from 237 crores.
Yeah, so there are different components to it. So the hardware would be, the servers would be amortized over a period of 5 years, the networking equipment over a period of 5 years, and the hardcore, the platform, we are amortizing it over a period of 10 years. So the different components, accordingly as per, so there will be different, time periods will be different for each category.
Then out of the 237 crores, can you break up that cost into platform and others?
It would be a bit difficult because then, as MD said, that then we'll be mentioning that amount, that, the TCS amount. So I won't be able to announce it.
Got it. Okay, sir. Not a problem. And the second question is on SGF contribution. See, last quarter you contributed around 11 crores. Now it is 13 crores. Is it a catch-up or the open interest has increased materially, and that is leading to increase in the SGF contribution, and how do we see this trend going ahead? Because last quarter you mentioned that our peak open interest was somewhere around 42,000 crores. So now I just wanted to understand what was the number in the current quarter, and this incremental is largely because of the open interest or it's a catch-up basically. Sorry.
Well, there are two, I would say, the variables. When I say two factors that determine is, one is of course open interest. That is the ultimate thing. Now, how based on the open interest, there are some stress test calculations that take place. Now, those calculations may undergo change depending on our representation being approved by the regulator. The very assessment of the stress test results. The second thing is that apart from the contribution by the exchanges and others, the members also are supposed to contribute as per the SEBI circular. Now, supposed to be in the sense, the exchanges it has been left to the exchanges to seek or not to seek. Because it's a competitive, regime, nobody else is collecting, so obviously we couldn't have collected. So if it is made mandatory by the regulator to have it collected from members also, then 25% of it, whatever is determined based out of these test results, will be contributed by them. So at this point in time, these are the two uncertainties. Now, having said this, yes, we have touched our highest, the open interest in this quarter also.
What was that number, sir, compared to last quarter, 40 to 43,000 crores you mentioned?
About 50,000 crores, because that's already open, published on the exchange.
No, the reason I'm asking is that this is 13 crores.
About 50,000 plus.
Okay. And the reason I'm asking, sir, is that the 13 crore is largely because members did not contribute, and then you made on their behalf a contribution. That's the way I need to understand it, right, sir?
No.
Not
like that.
did not contribute. Okay.
See, there's a 100 crore contribution is required. Exchange has to necessarily contribute 25 crores. CC has to clearly necessarily contribute 50 crores. And if we have been collecting from the members, 25 crores would have come from members. Since members are not contributing, the CC is contributing 75%. So that is the formula all the time. Okay.
Oh, okay. And the reason I'm asking is, sir, that this 13 crore kind of a run rate will continue going ahead also, or it's done now?
Not necessary. Because as I said, there will be the SEBI also has permitted the exchanges to consider whether the spot prices are, take the spot prices or future prices. And future prices are more, transparently determined in a platform, whereas spot prices are polled spot prices. So this is the difference. So if that is also undergoes a change, then probably whichever is, once you decide to choose one stream, then you will follow that. Whatever are the prices that are determined in the future, that will be considered. Maybe that may be another way that may reduce the the requirement, obligations on the exchange. But not a substantial difference it's going to make, but only speaks farak to padega. That's what.
Okay. So then we can consider safely that this is a recurring cost which will be there in your P&L going ahead also. Maybe amount will change, but it will be a recurring cost in your P&L.
It's good to have a problem. That's the way we look at it, because if open interest increasing means more and more people are looking at this platform, depth is going to increase, and stickiness is increasing. That's the way I look at it. Yes.
Got it, sir. And lastly, on new product launches, we launched steel. On any update on weekly expiry? Monthly expiry gold options. Any pipeline if you can highlight, electricity derivatives. Any things you want to highlight on new product launches?
Well, the option on mini natural gas and crude oil futures, I think we have got the approvals, and probably we will be launching them shortly. And again, each time we launch, we are testing it, make sure that everything is in order. So once that is done, that will be launched. That is option on mini contracts of crude and NG. The second thing is on the gold that we are not immediately considering while the testing is going on, but we would like to give some time more for that. And on the other one, the electricity features, we are yet to get an approval for that.
Okay, sir. And lastly, on your role, whether you are reapplying for the MD's role, sir, or how is it? I just wanted to understand that part.
Well, while it is individual choice, probably this is not a right time to answer. That's the way I would like to put it. As of now, my term ends on 9th of May.
Yeah, it's just 2 months away, so that's why I'm thinking whether you have made up the mind to apply again or. Okay, sir. If you don't want to answer, that's fine. That's it from my side. Thank you.
Thank you. The next question is from the line of Amit Chandra from HDFC Securities. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, to continue on the launches in terms of the products that you mentioned. So specifically, last time we said that weekly, not exactly weekly, but mostly a series contract is possible, and we are going to apply with the regulator for that. And also on the index side, we can launch the index options. So where we are exactly in terms of the application with the regulator and in terms of timelines for the launch of weekly and the index options.
Well, that is still work in progress on the index options and other products, serial contracts. As I said, we need to bite as much as you can chew. And at this point in time, these are the two products which are very promising. That's what I look at it, which we are going to start launching shortly. Once that is done, probably parallelly work is going on the other products which you have spoken. But these are the two ones which we would like to make them happen. Because each product, we have to engage actively with the members. And if we simultaneously launch so many products, I think members will also say, you tell me what is that I should work on or concentrate on. So I think that's a challenge which we face also, ecosystem being the same. We need to focus on one, make it successful one by one, or maybe maximum two. We are working on this, on those lines.
No, sir, but in terms of the timelines, so maybe if you can throw some light that, once you apply with SEBI, then SEBI will approve. Then again, you will go back to SEBI with the specification of the product, and then it will again get approved in terms of the specification of the specific contract. The whole process will at least take 6 months at least to get launched, or is it a shorter timeline?
Maybe about 3 months is what I would like to say. 3 to 4 months maximum should be in the usual course.
Okay. And sir, secondly on the SGF thing, you said that it's difficult to predict the SGF amount. As we have also seen in other exchanges also, the SGF has been growing. And the regulator has also told most of the exchanges to at least double the SGF contribution that they have. But based on what understanding we have is that SGF is not determined on terms of volume, but in terms of the concentration of the single client concentration, the volatility, and the maximum loss that can happen at a single member level. So based on that, the SGF is decided. So in our case, is it safe to assume that SGF can somewhere be around 5% of the revenues? That is what we see in terms of the contribution, or it can be higher. And if you can also share the concentration number in terms of what is the top 10 contribution in terms of members, especially in options.
Okay. You see,
Ladies and gentlemen, please stay connected while we reconnect the management line. have the management line reconnected. You can go ahead, sir.
Okay. Sorry then, what went wrong, I do not know. So what I was telling is SGF computation is based on the top 2 members exposure or 50% of the total market members exposure. So our exposure, our stress test results are based on the 50%, not by the top 2 members. That is that. So we are looking at that kind of scenario where if 50% of the members exposure has to be liquidated in a what you call in a graded manner, and in how much time it will take and what could be the extreme losses that can happen is what we have been looking at and accordingly providing for this GF. So it's not that our SGF is any less. In fact, ours is stringent as against the equity exchanges. That also we have pointed out to the regulators how it is being calculated. Having said that, you are saying that the top 10 members make the difference, but here it's not the top 10 traders. Traders, they don't keep the open interest as much as the others keep it, and we have top 10 members who keep the open interest are not the same as the top 10 players who happen to be the algo players. So that's what it is.
Okay. And so some clarifications on the cost side. So on the software support services. So in this quarter, 146 crores, excluding the 125 crores that we paid, it's around 21 crores. That is the additional amount that is there, which was around 9.5 crores last quarter. So is it fair to assume that this 21 crores would be the steady state, or there is some one-offs in this in terms of related to the rollout of the platform? And also in for the depreciation amount, the depreciation that we have reported this quarter, will it be similar? Will it be in the similar range, or we can see the depreciation to be higher because it got implemented on 16th October, so it is from 16th October we have taken.
Amit, the line includes software charges plus license fees. So this amount also includes the amount that we pay to CME, right? So please keep that in mind, right? And also on the depreciation part, as you rightly said that we have gone live from 16th of October, so you'll have to make slight variation for the full quarter going forward.
Yeah. But the license fees that we pay is around 5 crores a quarter, sir.
No, it's not 5 crores a quarter. We have gone substantially on
there's a fixed component, and irrespective of the turnover, you have to pay fixed component. And if the turnover goes beyond that percentage threshold limit, then obviously you end up paying turnover linked fee to CME. So that's how our turnovers have gone up substantially. That's how we end up paying more to CME.
Okay. So what would be the percentage that we pay to CME in terms of that linked to the turnover, roughly?
There's a fixed component plus 10% of what we earn.
No, it's not a plus. What if
if it exceeds.
Up to let us some X percentage of volume, 10 crores, 14 crores, or 20 million, is it? 20 million USD is consumed, and beyond that only the ad valorem will kick in.
Okay, sir. Thank you. And if I have further questions, I will come back and discuss. Thank you, sir.
Thank you. The next question is from the line of Chintan Sheth from Giri Capitals. Please go ahead.
Thank you for the opportunity. Am I audible?
Yes.
Yes, sir. Please go ahead.
Yes. Sir, on new product launches, you mentioned a couple of them, but anything related to index, launch which we were planning to to do multiple monthly contracts, which will look like a weekly expiries that we are planning, that we were planning. What can we expect from here on?
So that's what I explained in the previous question. Also,
okay,
these are called as serial contracts. So we have not as yet, launched or anything of that kind at this point in time, and that's work in progress as of now. But what we have done, wherever we are getting approvals from SEBI, and one by one we are launching. And because we can't wait also or keep it in cold storage for long, otherwise they will also expire. So that at this point in time we have crude NG and the natural gas crude and NG options on mini contracts we have.
Right.
So that's what we are planning to launch, and these two we will be immediately taking up at this point.
Okay. But if you look at futures mini contracts, they have not had enough depth or enough ADTOs. Does it make sense for option mini to on that future contract? Can does it make sense for us?
It does, because if you see now also crude main and then crude main options, there's a huge gap between the two.
Correct.
But I think that's how it happens.
Right. Okay. Got it. And SGF, if we look at the total outstanding, the quarterly data which we provide, which is around 759 crore as of December quarter, the incremental increase in sequential increase in the SGF is higher. I'm trying to still understand how should we look at, because earlier the quarterly total core SGF funds which we were holding in our balance sheet, the incremental increase was to the tune of 15 crores quarterly, which has sharply increased to 3 crores last couple of quarters. That is largely driven by the options, or how should we look at it? Or if you can explain this aspect.
One is options and the other is the silver also, where each product also their open interests are increasing. They may not contribute so much to ADT, but then if open interest increases even in that product, then automatically more SGF requirement triggers in. So options is one, but then in the case of silver and gold, options are also picking up, and open interest is increasing it. Having said that, the requirements are increasing. In the last 2 quarters you are talking about, yes, it's on account of options in crude.
So my question,
crude and NG, and we should not be counting the 190 crores which is penalties in the SGF contribution, because whenever we calculate minimum required corpus, we keep it outside that requirement, and the SGF contribution gets triggered in based on the remaining amount. So, for example, in the month of December, it's 562 crores. That was the requirement, and so as a result of which we had to contribute 13 crores, and additionally maybe 3 times more is being contributed by the clearing corporation, and together it is contributed by about 52 crores has been contributed by all of us.
Of which our part is 13 crore for the quarter.
Yes. But actual requirement is 562 crores only. So although we had 759 crores, that's not the 192
representation. Right. I got it. It also includes element of penalties and interest. Core is 562 crores.
Yes.
That you are saying. Okay. Got it. And lastly, on the other OPEX, if you look at absolute basis, also it's increasing. If you can indicate, Because it was a few quarters back, it was in the run rate of 20 odd crores, 15, 20 odd crores, and right now that is tracking slightly higher. If you can also help us understand that part. So earlier it was 8-12 crores. I am including this computer and technology 7 odd crore, 8 crore cost there. That I am including in the other OPEX to combine it. So earlier it was around 20 odd crores, now it's 30 odd crores. So how should we look at it?
No, it's around 21 crores if you add it. But during the quarter, what happened is that, one is this also includes our CSR expenses. So our fully owned subsidy, they generally, what we do is that we book the CSR expenses on a quarterly basis. It is divided over the year and proportionately over each quarter. But what a wholly owned subsidy does is that they account for it when they make the payment. So during the quarter, they've released a payment to the Prime Minister's National Relief Fund. So that's why it has been accounted. And there's no material changes. Only thing is that, we had during this there were some traveling expenses that we incurred because of investor awareness program. That is the only additional expense that has come in. Others have been more or less flat if you compare it with September. Right. Okay. And we have not so far seen OI increasing to beyond the December level or third quarter level, for which we need to incur additional SGF as of now.
No, I think, as I said, this current quarter, the OI has gone up, across 50,000 crores.
Right.
So we don't know where it will go, but as I said, it's good to have a problem. And again, we are toying with the idea of contributing more to HGF and forego the interest and then reduce the what you call margins. Then probably the trading will increase, and then that may compensate us more than the revenue loss on account of interest. So these are all the issues that we are discussing. Let's see what will progress.
Okay. Great. Thank you. All the best. I'll join back. Thank you.
Thank you. The next question is from the line of Parth Agarwal from Bastion Research. Please go ahead.
Hi. Thank you for the opportunity. I have one data keeping question.
Sorry to interrupt, sir. May I request you to use your handset, sir? Your audio quality is not clear, sir.
Sure. Is it better?
Yes, sir. Please go ahead.
Okay. Can you help me just reconcile one difference in your presentation, that is of page number 6 and 5 and 6 in the ADTO data? So as per page number 5, your ADTO in futures is around 20,796 crores, whereas in the page number 6, where you actually shared the breakup, that number is 2471. I am not able to reconcile the difference.
Can I explain? You got it? Which page?
He's telling it could be because of the trading calculation, including. So which chart you are referring to? Can you come again on the 5th page?
On the 5th page, if you refer to average daily turnover of futures, which is 20,796 crores for quarter 3 FY24, correct?
FY24, it is showing 2321. Is that the one you are referring to?
No. Quarter 3 FY24, 20,796.
Okay, 27, quarter for the quarter, okay.
And if I refer to slide number 6, quarter 3 FY23-24, if I look at the total, the second table basically, for the futures one, it is 2471 crores.
This is including. Okay. That is, I think, probably because of inclusion and exclusion of more trading days as part of the calculation.
So, the slide 6, does it include Murat trading or it excludes Murat trading?
The one which is okay, 27. Okay, higher side is excluding the Muhurta trading day.
Higher one includes Muhurta trading day.
Right.
Okay, got it. Okay. So my another question is, I understand that you as per your contract don't want to reveal the maintenance cost, but can you help us with a range projects between 5 to 10 crores per quarter, or is it less than 5 crores per quarter? Anything on that?
But I don't think that's correct, no? I mean, that also gives, we will be doing injustice to the contract, especially the confidentiality that we have to maintain as per the contract. That's not correct. I think it will be unfolding it as we go along. It will be unfolding as we go along. It's only a matter of 2-3 more quarters.
Okay, got it.
Once we come to the October, you will come to know of it.
Okay, got it. And also, so the 237 crores of software cost that we have capitalized, can you just help me with for that 237 crores? I understand that depreciation would be for 5 to 10 years depending on the different breakup. I don't want to know the breakup. I just want to know how much would be the additional depreciation cost because of this capitalization.
It will be in the range of around 30 to 35 crores.
Annually, right?
Yeah, that's it.
Okay, that's all from my side. Thank you so much.
Thank you. The next question is from the line of Shreyas Jain from Electrum PMS. Please go ahead.
Hello. Most of my questions have been answered. I have a few questions. Like, can you just give the breakup of the float income and the other income as well for this quarter?
So, during the quarter, our clearing corporation has earned around 26 crores. That was basically, as on 31st December, we had a clearing corporation had a float of around 873 crores, based on which they have earned 26 crores. So that is part of our operating income. And our own treasury income is around 16 crores for the quarter. Because we have invested we've locked in long term in state development loan papers as well as in target maturity plans. So it's around 16 crores. We don't have there's hardly any loose cash, just the liquid, what we collect on our CTT and transaction charges. Others are all long term.
We had also locked in the perpetual bonds.
Okay. So there was no other income for this, like the membership fees or the other charges?
That would always be there. Last time we also had one more separate line of the consultancy fees from CSE, Chittagong Stock Exchange. This time we didn't have that.
Okay, thank you. And what can we do to add volumes to the bullion options? Like, is there anything we can do to increase those volumes? Because 90% of ADTO is coming from energy and 96% of premium ADTO comes from the energy segment. So, like, there is a gap between the bullion futures and options. So, like, how can we close that gap?
Well, as I said, while we have been actively engaging with the market participants, the premium being very high in these bullion contracts, there is some kind of resistance, or we should say, not appreciation of the kind of opportunities that are available in this market. Obviously, you need a lot of retail participation. It will come in the smaller contracts than these bigger contracts. So it's more a kind of education, etc. Secondly, the underlying margins in the futures is also lower in the case of gold as compared to the both NG and then crude oil. And that's why there's a huge shifting towards the option contract. That's what we understand. So, but that doesn't mean that we should increase the margins in the gold. I think it's a gradual shift has to happen, and it may happen also. That's why I would like to look at it.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Lavanya Potla from UBS. Please go ahead.
Hi, sir. Thank you for the opportunity. So just continuing to the earlier question, so what are our margins on gold futures compared to the crude futures as of now?
Well, gold it is about 8% plus 8 and 1.2% maybe the extreme loss margin. I'll confirm that 1 minute. It's gold. It's about 8%. Okay. Crude oil about 34%, and natural gas is 20%. Around.
Okay. But even in options now, if we look at our option premium to ADV ratio of gold is much lower compared to the crude. But even then, because of low margin in gold futures, it will be more suitable for traders. Is it right way to look at it?
Yeah, but see, what we looked at, why the shift has come substantially towards the crude options is that because the underlying futures have become more expensive and less cost effective in terms of, or it's more cost effective the options. That's why there is a shift. Maybe that may not be true in the case of gold options.
Okay, got it. And this time option premium to ADV ratio has been higher. Is it just because of the higher proportion of energy contracts or anything else?
But it all depends on whether they are trading at the money or far away from the money. And I think the volatility was high. As a result of it, this particular thing has been taking place. And I think when the people want to get out of it, I mean, maybe they may have entered at the time of contract near the money, but when they have to get out of it, when the market is moving adversely, then they have to pay whatever is the premium and then get out of it. So that may be the reason why the options premium is higher than what it used to be. But in a stable market, this may not be so much like that.
Okay. Volatility had a play in this quarter then?
Absolutely.
Okay. So just wanted to check your opinion on options in terms of competition, because options of WTI crude, similar product which is available on NSE now. How do you see competition in the space happening over the last few months?
Well, ever since they launched, especially I would say that after sometime in October they launched, and they are increasing, but it is not something which is alarming. As I speak, maybe it is about 1 minute. I will tell you right now. It's there with me. Options about 3,000 crores ADT they are clocking, and in the month of February, 2,800 crores average turnover they clocked in the options turnover, notional turnover. Premium is 2 crores or 3 crores, 4 crores, something of that kind. Okay. Is it worrisome? I mean, I take everything is worrisome, and we shouldn't rest unless we see a complete blank at all these places, data points, and so we are working towards it. Let's see.
Okay.
Hello.
Thank you so much, sir.
Thank you. The next question is from the line of Divyesh Agarwal from IIFL Securities. Please go ahead.
Thank you for the opportunity, sir. Most of the questions have been answered. And just one thing I wanted to understand, this recently RBI allowed resident entities to hedge gold prices in IFSC. How does that impact us over a longer period? That is my question.
So in the GIFT City, there is hardly any, activity that is happening as of now. And I think it's only in the silver contract there is some kind of activity. And that too in the spot market, but not in the derivatives contracts. There's hardly any activity. So it's too early for me to predict anything on that. And but we don't see that that will be a threat for our existence or sustenance. I don't think so. Because they are all dollar-denominated contracts, and we have primarily the rupee denominated. And most of the people who are trading, they are all domestic traders, not the foreign. Foreign. And our contract also has got a custom duty hedge incorporated or embedded in it, and which changes once in 15 days or so. So I think this is a perfect place to hedge.
Right. And sir, if you could give any sense in terms of like earlier, before RBI banned hedging in the international market, some of the large jewelers like Titan, they used to do it internationally. Can they again go back to GIFT City, who are comfortable also hedging currency contracts separately? So what would be the quantum in our open interest from these large players versus small players?
Well, you see, the open interest comes big from the big players, no doubt about it. But there's no reason why they look at the other markets having got used to it. Maybe before there was adequate depth in the domestic market, they were trading there. Incidentally, the RBI banned hedging in overseas market. That's why they all have come over here. Now that liquidity has also developed and it's catering to their requirements, I don't see any reason why anybody will go over there.
Understood, sir. Thank you.
Thank you. The next question is from the line of Arvindar from Sundaram Alternates. Please go ahead.
Hi, sir. Thank you so much for the opportunity. So recently, we got the regulatory approval to for foreign investors to trade using direct market access terminals. I'm just trying to understand how it will help us. That is one thing. And sorry, this question has already been answered. This quarter, the premium turnover to volume turnover has increased. Is it something like a structural thing that is happening in terms of more hedging or anything happening?
Yeah. What I can say is as I said, that this quarter the volatility is more, and for which reason I see that the ratio is improved in terms of our revenue potential. But that's not a structural shift. I don't say that it's a structural shift. It's too early to make any such comments. So I think we have to wait and watch. If it is happening quarter after quarter, repeatedly, probably we can look at it, reasons for such a change. Having said this, FPIs are keen to use the direct market access DMA facility, so that they don't need to even now and then or discuss with the member brokers through whom they are trading. Probably it will be a seamless activity, and they will have a proper control on what they are doing it. And that is the reason why many of the FPIs prefer a DMA facility. And there's no time lag. If the moment they feel that yes, this is a good time to step in and then execute a contract, they can immediately enter as if they themselves are the member brokers. So that's what the advantage of having a DMA.
But they can obviously trade at a much lower cost in a global commodity brokerage, right? Like in an FPI. Like, is it only because of arbitrage opportunities that is available in the domestic market versus?
That's right. It is the arbitrage opportunities, and within across the contracts within the domestic market, or since our contracts are rupee denominated, again there could be another that play also can take place. and apart from it, the FPI concept has come because those who are operating in different markets, they are able to consolidate their books into one book, and that's another reason why they are doing it. Okay.
And just one last question, sir. How is the traction in steel TMT contracts, and who are the players who can possibly enter into this, either for hedging or for trading?
Well, not encouraging as yet, but I don't roll out picking up because just it's the first month of the steel contract, and it will take some time to mature. Okay. And the liquidity is the key to it. Obviously, we have no liquidity enhancement program or anything of that kind. So we are looking at market participant to join this. Let's see. We are working towards making it a successful contract. It should be self-sustaining in the next few months.
Sure. Thank you.
Thank you. The last question for today is from the line of Marshall Lu from Investor. Please go ahead.
जिस व्यक्ति से बात कर रहे हैं उन्होंने आपके कॉल को होल्ड पर रखा है.
So the line for the participant is on hold. May I request we take another participant?
Yeah, please go ahead.
Yes, sir. The last question for today is from the line of Sanjay Kumar from iThought PMS. Please go ahead.
Hi, sir. Thanks for the opportunity. Every quarter there are questions on the breakup of transaction income and the other operating income. It would be great if you could include these data points in the presentation. First question on coal exchange. Apparently, IEX has submitted a presentation to the ministry, and that there were media articles saying that it will be set up in 1 year. Any comments on this, and where are we in this coal exchange thing?
Well, as you know, of course, it's an old news that we signed an MOU with Metal Junction, M Junction, and for precisely setting up a coal exchange. We are actively engaged with the ministry and various consultations that are taking place. We have also, placed asked the regulators to give us a in principle approval to venture into it. So that's in process. So we are also keen to get into that. Yes.
So we'll be competing with IEX for the spot or for both spot and futures?
No, this is going to be a spot exchange only. For futures, you don't need to compete with anybody. If one spot comes, then probably we can start the contract in MCX itself. So we don't need to start separately.
And this timeline of 1 year, sir, is it possible or?
See, the ministry is yet to come out of the guidelines, and then the actual evaluation takes place. Whether they would like to have only one spot exchange or multiple spot exchanges, we do not know. So all that is still not determined. So it will take some time. Okay, the regulatory framework itself is not in place. Who will be regulating the coal spot exchange? Nothing is clear as of now.
Got it. And second, on electricity derivatives, now that there is a stand on market coupling and we have one price across exchanges, will it accelerate the finalization of electricity derivatives, or do you think that is also in a limbo on until that time?
See, the electricity derivatives has nothing to do with the market coupling concept. That is essentially to arrive at the spot prices, and we will be settling our contract at the end of the contract period. The all outstanding contracts will be settled on that one single price. So on a day-to-day basis, is it relevant? May not be relevant, but we will continue to use the prices also. But it doesn't impact. The future prices do not depend on that market coupling concept as such.
Okay. And finally, on futures, both ADTO and the UCC had a significant growth in Q3 versus declines in the previous months and quarters. Was it one-off that we had this growth in this particular quarter, or what was driving this?
Well, we expect UCCs to continue to grow, the active UCCs, but ADT in futures maybe a correction, I would say. We cannot compare quarter to quarter. Otherwise, it's supposed to be at 24,000 crores usually. It had come down in the previous quarter maybe, and I think we expect it to come back. And but more and more growth we would like to see in the futures contract than it is going down.
Okay. Thank you, and all the best.
Thank you.
Thank you.
Ladies and gentlemen, that brings us to the end of the question and answer session. I would now like to hand the conference over to Mr. P.S. Reddy, MD and CEO, MCX, for closing comments.
Okay. I think once again, thank all of you for your unflinched, faith, trust in the company, and we will continue to work towards meeting your expectations. And I think going forward, the legacy problems are all put to rest with this the last leg of the payment that we have made to the vendor. I think I expect the future to be bright. That's the only thing looking forward. Nothing more. Thank you. Thanks to all of you for joining.